Hello, everyone. Thank you for joining me today. It's January 20th, 2023. And let's start with a disclaimer. As always, none of this is financial advice. Please don't copy anything that I do. This is just for educational purposes only. And if you try to do something that I'm doing here, you will lose money. So don't do it. Okay, so with that out of the way, let's talk about what happened. Yesterday, like I mentioned, Netflix stock went up in after hours because of earnings. And it looks like it did save the market. I don't know if Netflix really made this entire run up happen, but what I think really happened is we had a couple of days of pretty strong selling, and at some point we needed to kind of stabilize, and I think Netflix just relieved some of the stresses that people are having about the market. So right off the bat, you could see here we started right there. We filled the gap, pretty normal, and we took off from there. This is a prior trend line, I'm not a trend line, I'm sorry. This is a prior resistance support line, which you see we hit the prior day over here. It kind of acted as resistance again. We hit it 1, 2, and from there it kind of kept going. So actually, not only was it possibly because of Netflix and some positive people feeling kind of positive because of Netflix, it's actually the 5th Friday in a row that the market was kind of going up. So if we look back the last 5 Fridays, they have all been positive and the market's done really well. Now, the next Monday is not always the same. It's kind of a mixed bag, but it's usually pretty good. Although the situation is quite different now, it's earnings season. We'll see what happens on Monday, but it's kind of up in the air. I don't know what's going to happen. So what did I end up doing? Well, 2 things. If you remember from the prior day, we had the 3905 put, which now has expired completely worthless, which is great. So we collected all the money for that, all the premium. And I had the 3985 puts. So it didn't quite reach it, and I had to roll the position out until Monday. Again, I don't like to keep anything overnight, especially over the weekend, but I don't use any stop losses. And like I tell you guys in the disclaimer, you will lose money. So you could see that, my position here was worth, when I sold it, about $500 or something like that. Then it turned into 5,000 that I was losing. Now it's about 2,000. And so what I did was, this one expired worthless. That one is done. So the 3985 is now rolled into Monday, and I rolled to Monday, but I also rolled it down to 3975. I could have rolled it to the 3985, but my goal is to always end in cash with no positions, especially during earnings. It's nothing's guaranteed that tomorrow or next week is going to open up positive again like this, like we had today. So I'm at 3. So I rolled it down to 3975. I could have rolled it down a little less, but I decided to take a little bit of premium. So how much did I get? Let's go click over here. These are just some puts that I bought because these are the far puts that essentially make this a credit spread. But so here we go. I bought back the 3985, and I sold the 3975, which is a $300 per contract price. So times 2, that's $600. So again, I collected some premium on this, made $600, rolled it out and down, and that way I am making money, lowering my exposure, and hopefully Monday is going to be, a day that I don't really want it to go up that much. I kind of wanted to just linger around this particular zone, to be honest. If it starts ripping up too much, I have a feeling that, I might get trapped again. I have to make the trade because that's what I do. And if I make it here high somewhere, if it starts ripping, I'm going to be, I'm not going to be as optimistic as I would be if the market was some over here. Because over here, there's already a lot of trades that happened, and I feel a lot safer placing a little bit more aggressive trades because I know the ranges are better and that they're more, they've just been hit in the past couple of days. So I don't really like when the market rips up too much. Like today we had almost just under 2%. I obviously don't like it when the market dives all the way down. Usually I like it to be kind of steady. That's the strategy so far. Hopefully it's working. And these puts right here were bought in order to, in case it does crash all the way down, I'm going to take these puts and I'm going to divide them into 2 more. So now I have 2, and then I'll make 4. That way right now, let's say it's 1,700. I'll go ahead and divide them into 2 or something like that. I'll divide them into $1,000 each, and work it that way. So I'd love to show you an example of that at some point. It won't be good for me if that happens. Obviously, that means I'll be trapped. But typically, that's what I do. Stay tuned. Hopefully this video is helpful for somebody. If you're learning all this stuff, we're gonna make another video on Monday. So if you like the content, please subscribe, give it a like. Thanks. Bye-bye.